Good morning or good afternoon, everybody. We'll get started here in about 1 minute. Just so you know, everyone's video and phone voice is on mute. If you do have any questions during this time, there is an area in the GoToMeeting app to ask questions, so feel free to pop it in there, but we'll get started in a minute here. Got a bunch of people coming on right now. All right, let's get started here. Good morning and good afternoon. My name is Chris Lee. I'm with Channelbytes. Today, we are joined with Securematics and Obsidian HR. We're talking about the CARES Act. Just to let everyone know that this session is actually being recorded. If you do have any questions, please ask them in the GoToMeeting questions box in the app. And we'll get started here. I'll hand it over to Brian Vincek.
Hey, Chris, thanks very much. First of all, thanks everyone for attending. I know these are kind of challenging times and, you know, your time is valuable. So I want to welcome all our customers and partners. As you know, since the beginning of this whole crisis, Securematics' goal is to provide some informative ongoing webinars as we navigate through this whole COVID-19 situation and the fallout from it. Our last session was about, you know, how do you immediately respond to the technical needs? That was mostly around work from home, VPNs and firewalls. And I think we've, you know, stabilized things quite a bit out there. So that's great. Today's session now is around the CARES Act. You know, it's a very dynamic and ever-changing environment out there. Just this morning, I think the government announced that there's an additional $250 billion worth of small business funding. And we're very fortunate to have Jordan Conley from Obsidian HR on the phone today, on the webinar today to talk through this. So I want to thank Jordan, Channelbytes, Real Access, Juniper and Mist, SonicWall, Pulse, and Ruckus. If it wasn't for those vendors and their support through this, whether it's technical information or how to apply for some of these programs like the CARES Act, we wouldn't be here. So I'm very appreciative to those organizations. Just to let you know that on April 23rd, we're running another fast track seminar, and Juniper will be discussing what's next, the shift they're seeing in IT infrastructure, some of the education E-rate initiatives that are going on right now because of the shutdown, how finance, healthcare, and work from home environment is impacting infrastructure. So please plan on joining that as well. So without further ado, I'll hand it back to Chris, and I want to thank again Jordan for being here.
All right, thanks, Brian. So with us today, we have Jordan Conley. He is the president of Obsidian HR. So I will hand the reins over to him.
Great, thank you, Chris and Brian. Appreciate the introduction and happy to be here today. Looking forward to speaking with everybody and helping where I can, both kind of bringing you up to speed on the latest with both the CARES Act as well as the Families First Coronavirus Response Act and addressing your questions. I've got a presentation that will take about 30 or 35 minutes, and then I will also address any questions you submit. As Chris mentioned, please submit them during the presentation, and I'll answer as many as I possibly can towards the end of the session. This is similar to the presentation I gave last week. to both a number of my clients as well as other small businesses. And I think feedback I got was many of them found it helpful to guide them through this really kind of dynamic time in terms of what's happening in the regulatory environment, specifically what's impacting small businesses. I want to thank Lisa Whetstone, who really on my marketing team, who helped me pull this together quickly. And Brian and Chris for having me here today. So let's get started. Give you a quick background. Let me see here. There we go. Quick background on myself. So I've been helping small businesses for over 20 years, primarily in the HR arena. I've been a kind of serial entrepreneur and really believe that small business is the backbone of the U.S. economy. And without them, we really struggle. It's really where all real job growth has come from in the last decade. Unfortunately, they're also disproportionately impacted during this crisis. Married with 3 young boys that are all doing school upstairs, as I'm sure many of you are today, and love a nice Colorado beer. Yesterday was National Beer Day, I learned, so I did enjoy a couple last night. Obsidian HR is a Colorado-based business. We help small businesses navigate HR challenges by basically becoming their HR partner, and then it's become an extension of their team to provide payroll, HR, benefits administration. We're part of a larger company that's based in Honolulu called ProService, and collectively we serve 2,400 clients. And so some of what I share with you today is going to be based on the real experience we've had with our clients and what they're experiencing over the course of the past couple of weeks. Try to make this as practical as we can be. So my goal today is to help you guys understand both the challenges and the opportunities in both of these laws that have passed in the past 3 weeks. It's really it's been a dynamic time, and seeing this much regulation impacting small businesses, both in a way that's going to help, as well as challenges that lie ahead in terms of the implementation and rollout. So my goal is to help you navigate that. I know there's been a lot of media around, particularly the CARES Act in the past week. So I'm going to assume that you guys have read the New York Times or the news and kind of skip over some of the highlights or some of the headlines, but really focus on what the impact of your business is, and what you should be doing and what you can expect based on what I'm seeing in the market here today. So my goal would be for you guys to have some actionable steps leading this webinar and having a better picture of what your obligations and responsibilities are. So I'm going to start by talking about the Coronavirus Aid, Relief, and Economic Securities Act, or the CARES Act. In my opinion, this is probably the most important piece of legislation that's impacted small businesses, certainly in the last several decades and maybe ever. With the big caveat that if it is executed well, which remains to be seen, we'll talk about some of the challenges here in a second, I believe it has the opportunity to save millions of jobs and thousands of small businesses during a time where they would otherwise go out of business, lose their job, and not be a viable ongoing business on the other side of the coronavirus crisis. For that to happen, though, the money has to start flowing very, very quickly. That has, by and large, not happened yet. I was initially really, kind of heartened by the pace at which the Treasury was moving. 2 business days after the law passed, the Treasury got initial guidance out. They opened up applications on Friday of last week, but the move from opening up applications to actually getting loans funded has really been a fumble from everything that I'm seeing, both in terms of the conversations I'm having with my clients and small businesses that are small businesses, as well as the bankers and legislators that I'm talking with. I spoke yesterday to Ed Case, who's the representative for the state of Hawaii, and his guidance was they are doing everything they can to provide more resources to the SBA to help the funds start to move, but that we're really fitting $350, which may become $600 billion through a pipe that normally in a normal year has $25 billion that passes through it, and that's going to take time to digest. I worked last week to help 2,000 of our clients apply for the loans that we're going to talk about here in a minute. None of them have their money yet as of today. Some of them have gotten confirmation that they have an SBA loan number, But the feedback I've gotten from the banks is the portal to which they are required to submit the information has been down and unavailable more often than it's been up. All that said, I think these technical challenges and process challenges, will be overcome, and this can still be a fantastic opportunity to help small businesses bridge this gap, but it does need to get resolved quickly, and more funding needs to be released. So now let's jump in and talk more specifically about how this impacts your business. I'm going to give a brief overview of what's included in the law, but I'm going to spend most of my time focused on the Paycheck Protection Program and some of the alternatives covered in the law. There's been the most media about the PPP because it is the most it's the most generous and I'd say most unique program in the law. But there are other things that you should know about that you may want to explore depending on your particular situation and how the rollout of the Paycheck Protection Program continues. So the law overall is over $2 trillion worth of stimulus funding, as I'm sure you guys have heard in the media. There's $32 billion in here that goes directly to the airlines and provides bailout there. There's emergency funding to schools and hospitals to both invest in infrastructure and shore up their infrastructure, as well as provide relief for things like capital investment loans and other things like that. The biggest area that we're going to spend the time on today is this $377 billion earmarked for small business, of which $349 billion is specifically tied to the Paycheck Protection Program. Again, we expect that $349 billion to go to almost $600 billion based on the conversations, the request from the Department of Treasury and the President and the dialogue that's going in today or happening today in the legislature. If you think about what that means from a how many employees can this pay, that the law is intended to pay employees for 8 weeks at $350 billion and kind of an average pay rate of $40,000. That much funding can pay about 40 or 42 million Americans for 8 weeks. But there are over 100 million Americans employed by the businesses that qualify. And that's one of the things that just hasn't been reconciled and continues to be a big gap in this law that will need to be addressed. And it's one of the key reasons for more funding. So let's talk specifically about the Paycheck Protection Program. This program is essentially a grant to a small business that's it's dressed as a loan. It's been created as a loan because that way the government could use the business and small business administration and banking channels to get the funds out and not have to create a new structure to make that happen. The loan is intended to pay for employee payroll expenses, including benefits and things like that, as well as leases, your rent, your lease, utilities, and any mortgage interest that you have. It's intended to be used in the 8 weeks immediately following the funding of the loan, really to get businesses through this emergency period. I expect that if this period ends up going longer than that, there will have to be additional stimulus that goes on the back end of this as well, but that remains to see what happens. It's a 1% loan. You don't have to make any payments on it for 6 to 12 months. That the details of exactly how long that's going to be depend on your particular situation, and it will be a 2-year term. That changed. It was originally a 10-year term and a 0.5% interest. Both of those things changed late last week as they finalized the guidelines on the program. What makes this particularly unique against any other SBA loan and particularly attractive is that it requires no personal guarantee, no collateral requirements, and doesn't require you to go exhaust other credit facilities prior to getting this loan. And that's unique among SBA, the other programs that the Small Business Administration typically run, which are difficult to get, typically take months to execute on. These are intended to be easy to get and forgivable so that small businesses can use them to keep their employees paid over the course of the next several months. So let's talk about who's eligible for the program. You have to have a business that was in place before February 15th, and you have to be under 500 employees, with a few exceptions. And this is one of the most controversial elements of the law that the media has been talking about. The hotel and restaurant associations were able to convince Congress to include the employee count to be based on the number of employees at each location. So for example, Outback Steakhouse that has however many locations all around the country would qualify as a small business under this law because they have fewer than 500 employees in each of their locations. It's one of the most controversial elements of the law, and it's where some of the early funding appears to be going. And I expect we'll hear more about that. And is something that probably doesn't directly impact the people on this call, but is something that will impact how much funds are available for the rest of the small businesses. If you are part of an investment group, if you have private equity money or venture money or outside investors that own a controlling portion of your business, and they also own other businesses that collectively add up to more than 500 employees, you will not qualify for a PPP loan. This has excluded a lot of venture-backed companies, a lot of private equity-backed companies. There are a few exceptions if you're a franchise where they basically loaned you the money or invested in your franchise to get you started, or if you're receiving specific financial assistance under the SBIC program, you also qualify. There is also qualifications in this for 1099s and other self-employed people. When we talk about the details of the loan, you'll see you can't use the funds to pay your contractors. However, your contractors can go and apply for their own Paycheck Protection Program and have their self-employed wages replaced under the program as well. I'm not going to go deeply into that, but know that's an option. I know, many businesses have critical resources that are 1099s or contractors, and giving them the guidance that they can start to explore that as an option is something you can do to help them weather the storm as well. So the loan, as I mentioned before, is intended to cover about 8 weeks worth of expenses, both payroll as well as those other qualified expenses that I mentioned. And so you can borrow up to 2.5 times your monthly payroll expenses. That's how they've kind of swagged it to kind of give you a number of what that expected spend can be. You have to spend 75% of it on payroll expenses for it to be forgiven, and only 25% on those other expenses. I'll go into a little bit more detail here. It is capped at $10 million, and you do have to kind of provide documentation of your recent payroll expenses. Lots of questions about forgiveness. I would say of all the things I've been talking about with small business owners on this program is, how do I know what's going to get forgiven? And the important thing to know is that they have not released all of the details or the exact calculations for how this is going to happen. And it still remains to be seen exactly how it's interpreted. However, what they've said in the current guidance is that it will be 100% forgivable if you spend the money in the 8 weeks following the funding of the loan, and primarily 75% on those payroll costs. And that payroll costs includes your salary and wages, including commissions for your salespeople and other folks, your health benefits, retirement benefits, and your state and local taxes. It does not include your federal payroll taxes under the forgiveness element of the loan. You also have to cap people's earnings you don't have to cap people's earnings, but from a forgiveness perspective, you're only going to be forgiven up to $100,000 per year on a pro rata basis. Over the 8-week period, that's basically $15,384. It's also not going to cover leave that's covered by the other law we're going to talk about today, the FFCRA. This final point on this slide is an area that I think has created a lot of confusion for business owners. And I asked specifically when I talked to Ed Case, the representative yesterday. I asked him his view on this, and the intent of the law, in his words, is to keep people employed even if you don't have work for them to do. So he gave me the example of a restaurant. A restaurant can get a PPP loan. They can have their people, they're not open other than maybe a reduced workforce to handle takeout, but they can still pay their employees, including the tips that they would have missed out on, that they're missing out on, based on previous pay, and keep those people employed during this time. This is intended to keep people off of unemployment, keep them having benefits, and do it through government funding as it's been set up. I think that's a key thing to note. Is the expectation is that if you take this, if you've done layoffs, you will be bringing those employees back to pre-crisis levels. If you haven't submitted, I'm sure at least some of you have, but if you have not and you believe you qualify for it, I can't stress enough that it's something you need to do as quickly as possible. If you use a payroll company or a PEO or another HR services company, they should be able to provide you the information you need in addition to the application that you have to complete. This is, they released a final application very late early in the morning of April 3rd. Every bank has also approached this differently, so I encourage you to contact your bank and make sure you understand exactly what they're going to need. As I mentioned before, we're putting 350 billion, maybe 600 billion dollars through a pipe that was built for $25 billion a year, and banks are struggling to keep up with the load. There's been a lot of coverage in the past 2 days about Wells Fargo completely shutting down applications because of their regulatory oversight. It doesn't allow them to loan any more money. There are still banks accepting applications. I will say that I've had a better experience and more robust conversations with smaller banks that are really focused on helping small businesses than I have with some of the larger banks where it seems to be kind of caught in the bureaucracy. If you have a relationship with a bank, you're going to likely have the best option by using a bank you already have a relationship with. And then one of the other questions is, I get asked a lot is, well, how do I calculate my average monthly payroll amounts? The law provides for 3 different methods. Most businesses are going to say, use your average payroll over the course of 2019. If you are a seasonal business, which probably doesn't apply to most of the businesses here, you can use the same period of time from last year to capture the seasonal element of your business. If you're a new business that was founded late in 2019 or early in 2020, you can use the first 60 days of 2020 to estimate your monthly payroll amounts. You have some flexibility there, so that you can use the method that applies to your particular business. So I want to take a minute here to talk about some of the alternative programs. The CARES Act is a broad law, and while the Paycheck Protection Program is, in my opinion, the most beneficial to small business and has the opportunity to help us, help small businesses the most, there are other options underneath the law that are things you should consider. The primary one is another loan vehicle via the SBA called an economic injury or disaster loan, or an EIDL loan. These are loans that this loan program has existed for a long time. It's intended, historically it's intended to have been used in the case of natural disasters or other sorts of things that created short-term disruption to small businesses. The program was altered with one of the first laws that was passed in response to coronavirus to speed the process and to provide an immediate $10,000 advance based on to small businesses within 3 days of applying. Unfortunately, from everything I see, the rollout of the EIDL program has also been flawed. I've spoken with several businesses that applied in the last week of March, none of which have seen their first $10,000. But the program does still exist. I think the SBA is simply overwhelmed with their ability to process both the EIDL loans and the PPP loans. You can have both a PPP loan and an EIDL loan, but you cannot use the funds for the same thing. So an EIDL loan can be used to pay other vendors. It can be used to pay for equipment or materials or inventory. There is no forgiveness provision within that law. It's a much longer term loan, 30 years with a bit of a higher interest rate, but it does still provide some flexibility. If you've received the $10,000 under the EIDL program, if you were one of the few businesses that did, that can be rolled into that will be rolled into the amount under your PPP law as PPP loan as well. The other 2 elements in the law that are worth considering, but are not compatible with the PPP loan, are the employee retention credit and the tax deferment. So the employee retention credit is intended for businesses that are shut down or have had a significant decline in business and are generally under 100 employees. There are provisions for larger businesses, but if you're under 100 employees, you can basically get a credit of up to 50% of the wages that you pay an employee during this crisis time, up to $5,000 per employee. You have to keep paying them despite them not working. Again, that's the intent of the law, or if they're working at a reduced rate. And I think it's worth investigating, but it is something you cannot tap into if you were using the PPP program. The other provision is the tax deferment. So this allows you to not pay any of your employer Social Security tax that is accrued in 2020 until the end of 21 and 22. This is effectively giving you, a short-term loan in the sense that you don't have to remit that pay to the government until the end of next year and the following year. So 50% would be due at the end of 21, and the remaining 50% due at the end of 22. It doesn't provide the same kind of influx of cash, but it can reduce cash demands over the coming weeks and months. Definitely something I suggest you investigate, but again, not compatible and not eligible if you do qualify for a PPP. The final thing I'll talk about, not on the slide, is there's been a lot of coverage around the increase in unemployment benefits. So the CARES Act also expands unemployment benefits and provides an additional federally funded $600 per week. And based on the guidance that came out just the other day, it appears that if somebody qualifies for unemployment at all, even $1 under the state guidelines that they live in, they will qualify for the full $600 that is provided for in the CARES Act. The rollout of that is still happening, and the details are still emerging, but it is through, I believe, the end of July, and can really make the impact of going onto unemployment for places where that becomes necessary less of an impact, because it brings the payout that an employee can receive up significantly. Generally, the weekly benefit, it varies state to state, but has historically been somewhere between $400 and $600 for somebody that's working on a full-time basis and kind of making average wages. So something to consider as you're making decisions for your business and what's going to be best for your employees. You have options to get funds to pay them. If you find yourself where you need to lay them off or furlough them, there are programs that can still help them be taken care of, during this time. With that, I'm going to shift gears and talk a bit about the Families First Coronavirus Response Act. This was one of the first laws that passed related to coronavirus, and has some very specific actions that you must take as a small business to ensure you remain compliant. And specifically, it's benefits in terms of leave that you must provide to your employees, or an exemption process that you must follow to make sure you remain compliant. So I'm going to cover what's included in the law, who's covered by it, how the law is funded, and some of the other regulatory concerns that you need to be aware of as an employer. So the FFCRA had 3 parts. The first was to eliminate co-pays and co-insurance for testing related to coronavirus, and no prior authorizations required from the insurance side. I'm not going to go deep into that. Just know that happened. That was really implemented several weeks ago, and now insurance companies can't charge that to their members, as a part of this law. The 2 things that impact small businesses are an expansion of the Family Medical Leave Act, both in terms of what the leave that has to be provided are, as well as what businesses are covered by it, and required sick leave that you're required to provide your employees that are impacted by coronavirus. So let's dig a little deeper into this and talk about who's eligible. So both of these programs apply to businesses that are less than 500 employees. So same guidance as the CARES Act there. Child care leave, which is the expanded Family Medical Leave Act law, applies to only employees that have been there for at least 30 days. This is different than normal FMLA, which requires employees to have been there significantly longer, generally a year. And so it applies much faster. It also applies to businesses that FMLA did not typically apply to. Typically, FMLA only applied to businesses that were greater than 50 or had more than 50 in a given area. Sick leave applies to everybody. So if your employee is currently employed, they are not laid off or terminated, they are eligible for this sick leave, again, unless you claim the small business exemption, which I'm going to talk about here in a second. I'm going to go deeper into both child care leave and sick leave in a few minutes, but one of the key questions I get here is, help me understand whether I can be exempt from this law. So I think the guidance on being exempt is, I will say, unclear. The only area where it's clear is that healthcare providers and dentists can claim an exemption. They do not need to enforce this law. They can choose to be covered by the law and offer this sick leave and still get the reimbursement, but they are not required to provide these benefits. The law also allows for an exemption of businesses under 50 employees. However, there are conditions on that, and final guidance has not yet been fully issued. If you go to the Department of Labor website and look at their FAQs, what it currently says is the owner has to make a certification and document their reasons that they believe that they are exempt, and more guidance will be coming. The guidance that we have is that you basically need to be able to say that providing this leave is going to significantly threaten the viability of your business. And that can be because having the employees out would make it not viable, or you don't have the ability to execute on providing this leave for some other reason. I think this remains to be seen how it will ultimately play out. I expect this to be litigated after the fact pretty significantly. The clear intent of the law is for the businesses should provide this, and the funding is provided by the government. And so it will be tough to make a financial hardship case that there's a financial hardship to not be able to provide this leave. I think that it's a more reasonable argument that your business can't survive without the employees that are going to be impacted. However, I think that the larger your business, even if you're 20 or 30 or 40 employees, that's going to be a difficult argument to make, harder argument to make than if you're a 5 or 6 employee shop. So not crystal clear here. The guidance I've been giving people I've been talking to is unless you can say really clearly that providing this leave is going to make your business non-viable, you need to err on the side of providing this leave to protect your business and your interests down the line. So let's dig a little bit more on the paid sick leave part of this law. It requires small businesses that haven't claimed the exemption to provide 80 hours of sick leave to employees if they are unable to work. This is in addition to any existing sick leave that you have in place, and it cannot replace any sick leave policies that you have in place. I'll talk a bit more about that here in a second. There are five different ways that employees can qualify for this sick leave, and I think you'll see that it means it's ultimately pretty broad in terms of who can qualify. The first is if an employee is subject to a quarantine, either by a government order or by a healthcare provider. I do want to point out that this is different than a shelter-in-place or safer-at-home order, and that alone does not qualify somebody for the sick leave. They have to actually be under a quarantine order, which don't exist except out in some very specific areas, or under specific guidance from a healthcare provider that they do the quarantine. The second is perhaps the most broad element here. An employee is experiencing some symptoms of COVID-19, and the guidance is that to qualify for this, they only have to be seeking a medical diagnosis. The law was specifically written this way because it's been difficult to get access to testing, and in many places, the guidance is if you don't have complicating conditions, that if you're experiencing symptoms, you should simply self-isolate. So basically, an employee has to attest that they are seeking a medical diagnosis and could be doing that via telehealth or another means, and they would qualify under this element. Both of those items, so the quarantine as well as somebody experiencing symptoms, means that an employee is entitled to their full salary, but capped at $511 per day, or $5,110 over the 80-hour period. The remaining qualifications still provide the employees pay, but they get paid at 2/3, capped at $200 a day. So significant step down in terms of the pay that somebody gets under these remaining items. The third is for an employee that has to care for somebody who has to self-quarantine. And this could be a friend, family member, child, spouse. It's really pretty broad. Could be a parent. And so if somebody has a need to care for somebody who is infected and is required to self-quarantine, then they can claim this leave and be paid at $200 per day. The fourth area is if an employee, and I'd say this is the item that probably applies to I'm going to guess probably almost everybody on this call and many, many employees out there, is that if an employee has a child under 18 years old at home and their school or childcare is unavailable, closed due to coronavirus, then an employee can take this sick leave and receive the $200 per day, a reduced pay rate. it does have to be a child under this particular this particular provision, but it does mean that basically anybody that has a child whose school has been canceled, which I think is pretty much every parent in the country at this point, they would qualify for this sick leave under this law. The fifth and final area here is the most vague of the guidelines. The intent of number 5 was that basically anybody that has the flu or other similar conditions that might be construed as coronavirus or COVID-19, could qualify for the reduced sick pay leave. However, based on based on the item number 2 above and the broadness of that component, most people are going to qualify under that condition for the higher pay rate and be seeking that, even if they are they have a different condition. So I expect more people to qualify for number 2, the full pay, rather than number 5. But it's in there in case somebody gets a flu diagnosis or another diagnosis, they still qualify for this leave. So a couple other important things to know. As I mentioned before, this cannot replace any existing sick leave policy. You can't, in fact, the law says you can't change your existing sick leave policies that were in place at the time the law passed. So you can't take that program away. You can't take away other programs or alter your leave policies, basically. You also can't require employees to take other leave prior to using this. But all of this does have, if they're going to use it, they have to use it in 2020. It currently does not carry over beyond the end of this year. Next is, I'll talk about the Child Care Leave Act, and this is the expansion of the Family Medical Leave Act that I mentioned earlier. Family Medical Leave Act is typically what somebody takes when they're unable to work or caring for somebody that makes them unable to work. Usually you have to have worked for a year to qualify for it, and it's typically been unpaid leave. There was no requirement to pay people that were on Family Medical Leave Act. This law substantially changes that. And it provides 12 weeks of job protected leave. That means that for most situations, I'll talk about this in more detail, an employee that takes this leave has to be placed back in the same position at the same pay they were in prior to taking the leave. So it's 12 weeks of leave. The first 2 weeks are unpaid. However, those can be paid under the sick leave that we just covered. And it can be, the intent is for this to be used for people who are unable to work or telework because they have to care for an employee's child under the age of 18. This again is very broad, and I'd say that most parents in the country could qualify for this under that condition as of right now. And you are, again, unless you claim an exemption, you're required to offer this to employees that ask to take it. And as I mentioned before, they can be combined with that sick leave. So the first 10 days can be covered by the sick leave, and the remaining 10 weeks can be covered by the child care leave. So it is paid, as I mentioned, it's paid at that lower 2/3 pay rate, capped at $200 a day, or $10,000 over the 10-week period. If you have part-time employees, it's based on their average earnings over the prior 6-month period to taking the leave. And if they're new, you have to make a reasonable estimate based on other employees in similar roles. As I mentioned, it comes with job protection. So you are required to, if you have more than 25 employees, you must give the employee back the same exact job at the same exact pay, or basically a substantially equivalent position. So if they were manager of customer service, you cannot bring them back as a front desk person. You could potentially bring them back as another manager level role with the same pay in a different part of the organization if necessary, but the intent is to bring them back to the same exact role. If you have fewer than 25 employees, you don't necessarily have to restore the employee, but you have to be willing to prove that that was not going to be something you could do. And so that's, again, something that I expect to be litigated after the fact, but it will, does provide an out for businesses smaller than 25 employees if that job does no longer exist. So somebody takes the leave, over the course of the time that they're out, the economy continues to get worse and your business is materially impacted. You can make an argument that that job no longer exists. It will look more favorable on if you bring them back into a different position, even if it's at a lower pay. But it's also possible there would be no role to bring them back in. If you find yourself in that situation, I highly recommend you talk to somebody that's an expert in that area to make sure you're protecting your business. Next, I'm going to cover how you get reimbursed for this business and for this law. So all of the leave, including the wages as well as the associated healthcare costs, your employer contributions to healthcare, are reimbursed by the federal government under this law. And it's done by reducing the Social Security tax that you owe as an employer, and that can be creditable. What that means is if you use more than your total tax liability, the government is going to refund you for what the full amount of benefit that you paid out is. So I have a quick example over here on the right. If you have $3,000, if you pay $3,000 in wages and benefits under this law, you will get a full reimbursement for that $3,000 by reducing your payroll taxes. And it can help your cash flow because you can immediately reduce all of your payroll tax payments, including your federal withholding, to pay for those benefits. So if typically you have payroll tax liability of $10,000 on a typical payroll between your Social Security taxes and your federal withholding and your other federal taxes, you can actually reduce all of your payment by the amount of the credit that you're owed and pay the government only $7,000 on this payroll. There's also a way to get a refund from the IRS if you need more cash to pay these benefits. The process is still a little vague and they haven't been very specific on it. I think because the focus has shifted to some of the other programs that have come out. All of this will ultimately get reconciled at your next quarterly tax filing. And so it's important to make sure you're keeping very detailed records on where you're spending the money, the associated wages and employees that are impacted. I'll provide some guidelines and documents as a follow-up, for you to aid in that process as well. A couple more things you need to know before we go to the questions. So this act was effective April 1st, the FFCRA specifically, so the leave. So all of your employees, if you're not claiming the exemption, are already eligible for this. If you have not distributed the employee rights poster that I've provided a link to here, and it will be in some of the materials out afterwards, you must do so. And you're, in fact, because they're recognizing that this is something you typically hang up in your break room or where hang your other labor posters, that doesn't work in a world where most people are working remotely, you are required to email it out to your employees or otherwise post it on somewhere conspicuously electronically so that your employees are aware of their rights under this law. Some of the early enforcement that we're seeing is for businesses that have not taken that step. And it's very clear that that's a requirement. And then finally, in the follow-up, as we send out additional materials, I'll provide a sample document that I'm recommending that people use to have employees request this leave. The guidelines for documentation are light, and that's really because the law is written very broadly, and many conditions don't require additional documentation. For example, a governor's order that schools are closed is considered enough documentation that an employee fits under the family leave portion of this law, because we know that if they have children, we know the school's closed and those kids are at home. So I'll provide that information as a follow-up as well. So with that concludes the presentation portion of this webinar. And Chris, happy to answer any questions that have come up.
Thanks, Jordan. A couple questions here. And I assume this question is probably pretty common with everyone on the phone, is a lot of the companies that are customers of Securematics work heavily with subcontractors. So they hire subcontractors to do some of the technical work or installs and stuff like that. Will they be covered or how will they be covered in the PPP program?
So the short answer is, by and large, they won't be directly impacted by your application for a PPP. However, there's a couple of things to know. Most of those, whether they're a 1099 or a small business on their own, an LLC or some other organization, they qualify for the PPP program as well. And so even somebody that's been self-employed, whether they've been doing technical installation or they were an Uber driver and getting a 1099 from Uber, they can apply for a PPP loan. I will say that it's clear that those loans are going to be deprioritized against the business loans because the dollar amounts aren't as significant, and the backlog is there. And so while I would encourage them to get their application in, those are supposed to open Friday for self-employed people. That may not provide fast enough relief. The other option is you are allowed to pay vendors with funds from the Economic Injury Disaster Loan, the EIDL program. And so you can apply for both a PPP and an EIDL loan, but you can't use the funds, can't intermingle the funds. So if you got an EIDL loan, you could use that to pay your subcontractors so that they then have the funds to pay their employees. So hope that addresses that.
Okay. The PPP loan said 75% needs to be used for payroll and stuff like that. What's the other 25%? Can you, you might have mentioned it, but could you repeat that?
Yeah, sure. So the other 25% can be used to pay your rent on your commercial properties. So if you have office space and things like that, you can use it for that. You can use it to pay, if you own your commercial property and you have a mortgage on it, you can use it to pay the interest portion of that mortgage, not the principal, but only the interest portion of it. And so you have to document that really clearly. Third, it can be used to pay utilities. So that's going to be your electricity, water, internet, things like that will be covered under that. There's also some language that says other leases that existed prior to February 15th can be covered. There, that I'm aware of, there hasn't been more specific guidance there. So I think I'd recommend that you go light there in terms of using it to pay other sorts of leases. It's clearly going to be forgivable for those three things that I specified. Other uses, not as clear.
Okay. And just to remind everyone on the on this webinar, if you have any questions, please use the question box in the GoToMeeting app. One more question here is the PPP loan with the EIDL loan. I understand that you can't commingle the two, but what's the latest on that?
Yeah, so one of the area that's been changing, I'd say quite a bit. So because the EIDL was modified first and allowed people to get, in theory, $10,000, with no repayment requirement very, very quickly, and then up to $2 million after that, there was a lot of interest in that very early prior to the PPP passing. As I mentioned earlier, the processing of those seem to have basically come to a halt. As the SBA has shifted to the PPP. I've talked to several business owners that have had EIDL loans outstanding for almost 2 weeks now, with basically no movement, including not receiving the $10,000. However, if you did submit that and get the $10,000, that you can also or you get any other portion of the EIDL loan that was already existing. You can actually include that and refinance it into your PPP loan. So they can interplay in that way. But really the intent is to get them for two different purposes. PPP loan to pay your employees, your mortgage, your rent and utilities, and an EIDL loan to pay your other capital expenditures and other vendor-related expenses that are non-payroll related.
Okay. Multiple questions on this is how do you, as a business owner, how do you apply for the PPP? Do we work with the bank directly, or is there a specific URL?
So you can go to the Department of Treasury website and access the application and their employer FAQs and documentation, but the application needs to be submitted to a lender. On the day the loan opened, all lenders that were already Small Business Administration authorized lenders, which is the majority of banks, but not all, were able to begin to accept applications. They have since expanded the program to allow any FDIC insured bank to become a member of the program and issue these loans, although the bank has to go through a process to do that. So if you bank with What are the large banks, national large banks? They're absolutely going to have a division that does this, and they all have put up portals to submit your information and get in the process. If you're working with a smaller bank or a credit union, I advise you to call your business banker and talk to them about what their process is. What you'll also want to do is, if you use a payroll company or a PEO, many of them have already created packages of the information you'll need to provide along with your loan. So, for example, we did that with all of our clients. We dropped it in their, in their mailbox on Thursday night, so they could apply it, attach it and apply to for their loan on an expedited process on Friday morning. Every payroll company in the country now should be able to provide you that information that you need to attach with it. But again, every bank is a little bit different. I've had banks that are requesting, corporate documentation. They want your articles of incorporation or operating agreement. And I've got other banks that have just taken payroll reports and, submitted the application and gotten it, accepted by the SBA. So the process will vary by bank. I advise you to contact your bank or your business banker for specific guidance.
Okay. And just speaking from personal experience, my bank actually provided a link that we went to, and once you have all your documents together, it's like 20 minutes to get through it. Another question here is, what's the best way to calculate payroll for employees who make over $100,000 a year annually?
Yeah, so the best way, so it just includes their wages. It doesn't include any other benefits or things like that. And the way to do it is to cap it at that. They want you to cap it at the monthly amount. So I think that's 7,000. It's 70. I could do exactly the math in my head. I think it's $7,200 roughly is what it works out to be. And multiply, all of that will get multiplied by 2.5 when you go to apply for the loan. You basically cap their earnings, their monthly earnings for purposes of the monthly average calculation at the monthly equivalent of $100,000 a month.
Okay. Another question, my bank has stopped accepting and can't guarantee they will process it. Where do I go? I submitted PPP yesterday afternoon. They closed acceptance that morning.
Yeah. I've heard this a lot, unfortunately. What I recommend is get on the phone and call every bank that every bank you can find. There are more banks coming online. If you go to the Department of Treasury website and click the link at the top for COVID-19 relief, they also have a link to lenders that are accepting applications. I looked at it earlier this morning, and there were banks that were listed there. I will say that, I think you've probably seen in the media, there's some banks that required people to have an existing relationship or even existing loan products. I think you're going to have better luck with a smaller, more locally focused bank that you can actually get somebody on the phone with than, one of the big nationals at this point in time.
And just to add on to that, just from my research, we're finding that some of the smaller banks are better to address some of these things. Is there a cutoff date when you can, when they will not accept any more PPP?
When the money runs out. So it's a first come, first serve program. When the initial $350 billion runs out, if there's not been additional funds authorized, loans will stop. I don't know exactly where we're at in that. The Treasury had been providing kind of multiple updates per day, but I have not seen an update today as to how much has actually been issued or kind of authorized at this point of the $350 billion. However, once that's gone, unless there's additional funding authorized, the lending will end.
All right. Regarding the 100K, are the benefits, i.e. life, health insurance, 401K contributions, company paid FICA and Medicaid?
No, so the guidance that came out just the other day is that the $100,000 is based purely on the wage portion of their earnings, not the rest of it. So wages, commissions, salary, not the benefit. So you can, so for example, if somebody makes $120,000 a year and then you have another $10,000 a year in benefits costs, retirement and health insurance costs, you would cap their earnings at the $100,000, the wages, and then you would add back on the $10,000 in benefits, on a monthly basis.
Okay. Is the SBA COVID-19 Economic Injury Disaster Loan application the same as the PPP loan?
No, the Economic Injury Disaster Loan is the EIDL program. That's this separate application and a separate loan with different terms. It's non-forgivable. So that's the other loan that can be used for vendor payments and non-payroll related expenses.
Okay. I think one more question, and this question is for me because I appreciate you taking time out of your day. Can you give everyone a little bit of an advertisement of Obsidian HR?
Sure, absolutely. So, Obsidian is partnered to small businesses, and we really help you become a better employer. That's our goal and what we try to stay focused on. We want to make it easier to be an employer, keep your employees engaged and happy, and make sure you stay compliant while offering the best benefits and kind of programs that are possible to your employees. So happy to talk to any of you guys that are interested in that. We work with, as I mentioned earlier, over 2,000 small businesses. They range in size from 2 employees to 800, and passionate about making that easier for small businesses. So, thanks for having me.
All right, well, let me give you one more question because it just came in.
Sure.
What does the 15,384 amount on your slide represent?
So that is, if you take $100,000 and break it out to 8 weeks worth of pay. So, 2 months is actually more than 8 weeks, and so you can't just take it and divide it by 2/12 or 1/6. You actually have to divide it by the 8 weeks. So take $100,000 over 52 weeks and divide that by 8. And I think I did that math right. Let me check it real quick now. So $100,000, 8 divided by 52, times 100,000. Yeah, exactly. So it's $15,384 is 8 weeks of pay at $100,000 a year.
All right. Well, I appreciate everyone's time today. This will be available as a recording probably tomorrow. If you have any questions, please reach out to Securematics and they'll get you in touch with the right people. Have a great day.
Thank you.